Ethereum had a roadmap, like L2 is the way to scale, and like why don't you measure like how much throughput are secured by the layer one? In that case, you should like combine everything on L2 to like say, hey, all the base volume also counts as Ethereum. I think like it doesn't mean that like this metrics is interesting, but it doesn't mean that Ethereum needs to like cater towards it for its roadmap. I agree that like this metric shows that Ethereum is not accruing the economic value it should. It's just because the L2 economics is wrong. I think blob fee needs to be higher. But also like it's so hard because there's like Celestia and others like trying to lower the gas like the blob fee, like a DA fee. And so how can you really keep people on your platform? Like the L2 roadmap seems to be not working or has its trouble. But it doesn't mean that Ethereum needs to compete as a retail chain. We have to have more meme coin activity.
Hello, everyone. Welcome to another episode of the Index podcast, where the three of us discuss on-chain data, chart crimes, and metrics that move the crypto industry. Today, it's just the three of us, actually. So I have with me Denning, on-chain corgi at Flashbots.
Hi.
Hildobby, resident data house elf at Dragonfly.
Hello, everyone.
And I am Boxer, and I am the community powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice. We are acting independently of our respective professional roles. And with that, GM, good to have you back. And this is the first episode in a while. We've kind of been slacking a little bit, but we're coming back at exactly the right moment in time because currently there's a giant debate going on about REV on crypto Twitter, and REV is real economic value. And in this episode, we'll try to break down what is REV, do we think it's good, kind of replay a bit of the conversation that happened on Twitter, and also maybe what would be other approaches to actually value this or like value these chains and kind of have that conversation. And I think to get started is just what is REV? Like let's figure out what these mysterious three letters actually stand for. And I think Hildobby, you've just go ahead and try to explain this, and I think Denning and me will help where it's applicable.
So real economic value is a term that was popularized by Blockworks, mostly Dan Smith from Blockworks. He's been he's made some dashboards and shared a lot of essentially update on the metrics. The dashboards, it happens to be one of the ones on the Blockworks that is publicly accessible. And the metric essentially attempts to value a chain based on all the fees in and out of the blockchain for just submitting transactions, submitting tips. It includes, burns. It includes, so MEV is one part of it, but it is not the full picture, and it's just how much are people paying to use the chain, and how does it compare to other chains? That's how I would define it. Do you guys agree with this?
Yeah, I saw some good articles summarizing and comparison of the definition or like a formula of how this is composed. It basically stands for in-protocol fee and out-of-protocol fee. So basically within the protocol, as of today, a lot of the L1 and L2 are implementing EIP 1559. It's like base fee, priority fee, blob fee as well for Ethereum L1. And out of the protocol tips would include MEV boost, which only exists in L1 Ethereum today, or Jito tip on Solana. So that's combined all together. It is a very loaded term. It includes all kinds of behavior and activities, right? Like when you think about like the total value here, it can come from real retail users. It can come from like central exchange depositing funds for their users. It can come from L2s using L1. It can come from like MEV bots paying. And also like I think all these terms are very, they can shift between each other. What I know, a lot of MEV bots, they pay their tip in priority gas fee, so it may not be represented in the MEV bot boost tips.
I think the easiest way for me to break this down is all of these blockchains are in the business of selling block space, right? So like, you genuinely you want to build a blockchain that people use. that developers build applications on, so then people can use them. So if I build my blockchain and nobody, or like the fees are very, very low to actually get included into a blockchain, that might be like, there's like edge cases like World Chain or something like this, where they throw away all trust assumptions and they're just like, okay, let's make this really cheap. So I think there's so much nuance in here, but in general, a blockchain has a certain capacity per block to include transactions. And the mechanism to be included into the blockchain usually is just Flashbot's favorite word, auctions. You can just bid more money, and whether that's in protocols, so like in ETH, you kind of crank up your gas fees, you crank up your priority fees, whatever, or you start paying special tips to validators or miners or whoever validates these blockchains, to be included into the block, even though your like ETH priority fee or whatever might not actually be high enough. But this is like an out of protocol fee, so you can kind of like you find a new mechanism to basically bribe someone to be included into blockchain. So blockchains are in the business of selling block space, and that block space, or like the revenue that they make from kind of like selling that block space, is what is commonly defined as real economic value. So I think, Dobby, if you want to throw up the Blockworks research site, or then you want to decept here real quick.
No, yeah. I just wanted to caveat that like what we are talking about here is a major case of how people have designed the block auction, space auction. But there's also first come first serve model, which is like Arbitron, Algorand. In which case it's like there's drawbacks, like pro and cons. When you decide to have an auction, you may have or like there's like a triangle of like spam, or the chain gets expensive and everything. But yeah.
Doesn't Arbitrum have time boost now as well? So like Arbitrum is no longer strictly first come first serve. But yeah, I think a lot of the ZK chains, they're still basically running on a first come first serve, since their sequencer is very simplistic. Yeah. Browser needs. Okay, there we go. Wait,
here is the essentially the canonical REV dashboard. Let's call it that. Created by Blockworks, and it highlights. It's a very simple dashboard in concept. It just highlights how much REV has every chain and compares them, across one another. Let's, instead of having daily, let's reel it back a bit. I'll put this in full, and I think look over maybe on monthly. What we can see is that essentially Ethereum was king of the hill back in late 2021 with 1.8 billion in REV on the month of November, and it's been downhill ever since for the chain, whereas Solana has increased and has overtaken Ethereum in September last year, and has since stayed above. It's gone down actually slightly over the past 2 months, not slightly, quite significantly from its highs, but it remains king so far. So yeah, it's an interesting metric, and it has been, I think, part of the controversy of it is that it makes Solana look good, but it doesn't make Ethereum look good, and that's in essence, the whole point. People are arguing about this. Like, should it be the one metric that defines chain valuation? I don't think any metric should be that, but it's probably one of the better metric we have currently. But yeah, it makes for an interesting debate, and part of the interesting nuances as well is where does this REV come from? Like, what is it made up of? Because it's not the same across every chain. I think there was a saying, I can't remember who said this, but I thought it was interesting, where someone said that Ethereum should focus more on execution and Solana more on MEV mitigation, and I think that's actually pretty good, state of things on how the two chains compare and how they're fighting about, like, hey, no, our MEV mitigation is better, yeah, but our execution is better, and it's always like not listening to each other's and just arguing over each other's. So yeah, it's interesting to have metrics that kind of like put them side by side. But yeah, I do wish there was some kind of better, easier way to find a breakdown. I tried to, over a year ago to get like all MEV on June, but unfortunately, for Solana, but unfortunately it was very, very heavy in terms of compute, so couldn't end that research and compare it to EVM chains. But something, for example, I would be really, really interested in is what is the MEV over volume ratio for each of those chains? Because ideally for users, from the chain's perspective, you want MEV. From the user's perspective, you don't want MEV. You want the best place to settle your trade where you get less fucked from fees. That I don't know. I feel like that makes sense. So yeah, what do you guys think on this on a high level, first of all?
I think like without breakdown of how much the REV comes from gas fee versus MEV tip or GITO tip, it's probably missing the point, or like probably emphasizing maybe on the wrong thing. Like maybe if we break down this number, turns out it's mostly base fee who got burned, and they will give us a different interpretation. I think like generally, it kind of makes sense that Solana has been taking up in terms of like how much fee are getting paid generated, or like GITO tips are getting paid, simply because of all the meme coin trading activities. And Ethereum is, if I imagine the breakdown, probably has been shifted towards less retail activity but more L2 gas fee being paid. I remember Dolby, you posted a thread a few weeks ago where we see that like a lot of L2s are getting contention and like had to kind of like wait or basically switch to call data when base are taking up all the block fee. So I think they're like different use cases, L1 now, and it's just like it doesn't make sense to compare this number to be, oh, it's higher, it's a good metrics, or it's a bad metrics. It has a lot of implications.
Depends on your agenda, I guess.
Yeah, I think we can get into that in a second. I think for the audio listeners, quickly, in just to get a sense of the scale here, in February, Solana had $195 million in REV. Ethereum ranks second with 87 million, and then Tron actually comes third with something like 50 million. Then BNB, Bitcoin Base, they're all kind of ranked like below 20 million. So just to quickly kind of like contextualize this, and then in the most recent month, so in March, Solana dropped down from 195 to 71 million. And then Tron is actually up there at like 53 million. I don't know what's happening on Tron. This is really surprising. And then Ethereum kind of like stayed pretty, like, actually halved its REV as well with 37 million. So this is this is a very reflexive metric. So the more activity there is on blockchains, the more scarce the block space is that these blockchains are selling. The higher kind of the REV goes, and the REV, like if there's kind of like a very heavy like over demand, that's not a real word. If there's too little supply for the demand of block space, this metric can actually get pushed really high. So we've seen like in January, this was like the Solana, like Trump had just launched its meme token and like everything was going crazy. Solana actually had a REV of $551 million, which is completely insane. Like just like that's a giant number. Like if this was a company, like that's a really big company. But now let's think about, okay, where does this money actually go? And like of course it doesn't go to the Solana Foundation, but actually this is just the revenue that the validators of Solana earned, and like this doesn't even include any kind of Solana emissions or anything. Go ahead, Denning.
Yeah. I just want to like add a few caveats on what you said. I feel like first of all, a lot of these are base fee, which get burned. So like validator don't really get it, right? And so it's like somewhat baked into maybe like the economics of the token as well, like the SOL token or Ethereum token. But yeah, another thing is I think I would also basically frame it as in this is a function of both like the block space being sold and also how expensive the block space was. Simply, basically similar to how gas cost is equal to gas use times gas price. Pretty much these are all like gas priority auction here. But beyond that, it's also it's not only just the demand for the block space. I think it's also a function of how much money people actually might be making out of moving the money on chain. So like if you think from the arbitrage, the MEV part of this number, the arbitrage bots are making profits from trading on chain versus trading on centralized exchange, and they're making a amount of arbitrage, and then they're paying out of some amount here, which is kind of a additional on top of the block space only.
Yeah, I think those are good call outs. And actually, we should probably, Dobby, if you can exit this chart, and maybe if we can go to the Ethereum variant and just discuss like what does REV actually consist of for these individual chains.
What do you mean the Ethereum variant?
If you go to the Ethereum overview page,
my
on the
bad.
left, yep. And then if you go to financials, I think it shows the REV broken down by, yeah.
Oh,
so,
nice.
Yeah, so now we can actually
nice.
bring up a chart here, which is, can you put this on monthly as well?
Yes, sir.
So I was previously, I think I mentioned the February and March numbers for Ethereum, which were something like 95 and 37.
37 and 34 million.
No, February should be 95.
Sorry, yes, February's.
Oh, 78.
Wait, I have 78.
Yeah, my bad.
Yeah.
But yeah, we should maybe mark this. So if we break down these numbers for Ethereum, so in February we already mentioned earlier, 78 million, and then of those, 25 million are base fees, 20 million are priority fees, 31 million are MEV boost tips, which is actually a lot higher than I anticipated. And then blob fees are only 770k. It's kind of like we can discuss that later, but that's a joke. Like this is gonna be the future of Ethereum, and it's 700. It's making 700k. Like, come on, guys, what are we doing?
Well, we just said that, right? Like L2 sometimes still switch back to priority fee and call data instead of blob fee. So
well, no, so that was pre-Pectra. We'll see how it goes once we're back at saturation. But there's an EIP that has made posting solely cold data on Ethereum much more expensive, and so it's a much higher multiple to post on cold data. So hopefully, it like deters from using that like other method and incentivizes people to like chains to actually use the blob space for what it's for. But yeah, we'll see once we reach saturation. For now, we're I think 2/3 of the way in total. Like we went from like 3 blobs per block on average to about 4 blobs per block, and we would be at target at 6.
got it.
But yeah, so what do we know about what happens to the base fees? I genuinely always get confused about these things. Do the base fees all get burned?
Yeah.
Okay. So that's already kind of half. Is it half?
Well,
at least
it's
for
less than half right now, but it used to be like the majority of it. Actually, we can look in percentage wise, but it used to be over 80% for the longest time, essentially since EIP 1559, I believe, August 2021, where it took over from priority fee, which was the sole REV driver on Ethereum. It was the majority, and then since basically this year, it's gone down to 30% and below, like even 20% the last 2 months, where priority fee still take a decent chunk of it. I think it's basically, well, it's grown a bit, but it's relatively the same. Whereas MEV boost has been on the tear, and in terms of fees or like percentage, actually it hasn't been on the tear. It's more like percentage wise because the rest hasn't has been going down essentially. But if you look in relative terms, in absolute terms, it's
stable.
It's fairly consistent. Like right now, 12 mil a month, roughly, and it has some peaks, but it's roughly around there most of the time.
Yeah. can we go to the Solana breakdown as well? Because I think there might be a slight chart climb in this metrics.
Ooh, interesting.
Because if
Spicy.
you look at the definition, it seems like Solana has voting transaction included. So the vote fee here, I guess it doesn't really make up how too big of a percentage. I believe it's something around like 5% at most. But still, like voting transaction is a concept related to consensus, right? Or like, I mean, like there's no voting for Ethereum paying fee in the execution layer. So if you think of like all the revenue for the protocol for Ethereum, there's like a lot of issuance in the consensus layer who each other the validator is attestating different transactions. I think this voting transaction is more of a concept of consensus layer. And so it's like, it got somehow squeezed into this total, which is a little bit inflating the total for Solana. So like, it's again, like when you compare different systems, like the number of wallets is not exactly, a number of accounts doesn't really equal to each other.
Just for listeners, for context, vote fees were up until end of 2023 were the main driver of REV, but that's mainly because there was barely any REV back then for Solana. And since then, priority fee and GTO tips have been taking over essentially around 90% of the REV. And it's been fairly consistent since like early 2024 with GTO tips taking, slowly growing over the other. And now it's over 50% of total REV. But yeah, and vote fees make up for like 5 to 10% roughly per month.
And one other thing I want to say is, I remember when I was comparing like how much MEV revenue are comparing across Solana and Ethereum. Pretty much earlier this year or last year, it was around the same scale, and the only difference from then to now is like Ethereum price has dropped largely, and so all these now we're comparing the REV across chain is a function of also like the asset price, right? Like Ethereum is kind of down bad, and so the REV now is getting flipped by Solana. But does that really reflect the on-chain activity or adoption of usage? Not really.
Well, looking here, even in ETH terms, REV is down bad on Ethereum. Sorry to kill your argument.
Yeah.
I wish I was with you, but
Yeah. I guess the MEV portion was like at par with the Solana sizing, but the
oh,
base
you
fee
mean like
doesn't.
percentage-wise, the MEV of both is
No,
comparable?
no. It was like when I was looking at the Jito Bundle Explorer, and then I was comparing like what's the annualized total amount of MEV. It was at the same size of like 500 to 800 million per year, similar to like Ethereum's.
But wait, can we just look at the numbers right now? Like it seems like G2 tips are relatively straightforward at like 30, 40
Yeah.
million, something
What
like that. And then
what site is it? I can put it up.
no, it's just right here. We
wait,
have,
what?
We have them. We have the MEV boost tips, and we have so maybe if you, yeah.
Okay,
So
give me 1 second.
you see here if you switch this back to US dollar values, because like
yeah.
sure you can argue like there might be like a drop in ETH price or whatever, but I think the goal of this metric is to be like, okay, I don't care about all of your noise and all of your special arguments and like and like all of the history and like all of the stuff. It's just like, okay, like how much are these blockchains actually like selling their block space for? What's the value that's being generated here? And then I think monthly is always the best. Like this is such a volatile metric. So if you look at this like
on 2 tabs, so we can, I can switch and hopefully make it.
G2 tips for
G2 tips. Sorry.
Yeah, I mean for we probably don't like January is like a complete outlier month where it's like 200 whatever. What is this number? 296 million. Like that's crazy. But then even so, February, March, April. February we see about 100, and then March, April we see about 40, 50 million. And then if we compare that to the ETH values, where it's like, okay, we also had a peak in activity in January Oh, actually,
February.
it
Oh, yeah.
was in February. What the hell? So the peak
Yeah.
for Solana was in January. The peak for MEV for Ethereum was in February. That's interesting. But yeah, it's hovering around like 40 million January. Then there's a real big peak of 31 million February. And then we basically just continue like 14, 12, something like that
Yeah.
for March and April.
Mhm.
So there's three, like even in down month. So if we just compare the last month, the last full month, April, that's a like I think it's like 12 million against. Pull the other chart up again. Is it 30, 35, something like that?
30 and 50. Sorry, 40 and 50.
Yeah. So there's like 3 times, 4 times the amount of um, just tips or like MEV style tips, which is in the Solana instance um, that's tips to Jito, and in Ethereum land that's MEV boost tips. So I think like you can like cope all you want about the ETH price and like oh like this doesn't, I don't know, like what would be your response to this thing?
I think the
Um,
interesting bit is also looking at like just volume in terms of because this comes down also to trading volume on both chains. And right now, wait, so BNB Ethereum currently has 25%. Where's Solana?
You should pull up the C launch dashboard.
Wait, I thought
No, it's
Fredericks
not.
had.
C launch has a great dashboard that does this.
Let's see.
I'm seeing daily around 10K so on Jito's website, which translates to something like 36 million, 40, 50 million per month. Is that what you're
Yeah.
seeing?
Yep.
Okay.
That translates. Yeah, it's roughly in that ballpark. Yeah, that one. A bit hard to find.
Okay, so oh my god, trying to get it nicely centered a bit. So Solana has 40% of volume across all chains on in terms of DEX activity. Ethereum is 17%. I think if you add other L2s, the two are basically in somewhat on par. But if you exclude it, which here is what we're looking at, because we're looking at like in protocol fees, then we can see Solana is a bit higher. But the I think the amount of fees paid for in general for Solana is higher relative to the volume than it is on Ethereum. So it is more efficient. I mean, it's not like a secret that in terms of MEV and stuff, Ethereum is just still slightly ahead, and actually not just slightly, but I think it's ahead quite a bit.
I guess,
But yeah, so
like let's be specific on that. The MEV landscape on Ethereum is just much more advanced. There has been such an arms race in terms of like what searches are doing, like what all of this like MEV pipeline. I forget all the acronyms, but like the MEV pipeline in Ethereum has become so sophisticated that actually they're not able to overcharge the user by a lot anymore, because otherwise like there's always like your n+1 searcher who's not gonna fuck the user as much, or like that. Does that make sense?
It's
no,
like
I think it makes sense.
it's like like it's so advanced that the competition is very competitive, and so everyone had to pay out 99% of their value to the chain pretty much in the builder tip or like the gas priority fee. So the most of the MEV value are extracted out to this like REV metrics actually. But on the other side, I kind of want to say like I think directionally it is true that like when a chain has more mature infra and tooling, it should encourage more competition and actually increase the revenue. How to say proposal revenue? There's actually a paper written recently by Uniswap and Columbia professors about it to like how to build a theory model to prove that. But more importantly, I think a lot of this thing has to consider also the actual retail users, right? Because a lot of the value comes from people moving money around. And so now Ethereum doesn't really have this meme coin long tail activity, while Solana, imagine all these like Telegram bots, sniping bots paying shit load of money. and like their user doesn't really care about how much price they're getting, and like just willing to pay a lot of fee and like slippage to trade. And plus that, there's actually a opposite direction of movement where on Ethereum, because all these like tooling are getting more and more mature, there's more and more transaction getting to private mempool. There's like much less transaction in the public mempool to get sandwiched as well. A sandwich MEV has been dying on Ethereum, but at the same time, because Solana activity, we have seen the number where like there are validators willing to basically sell their mempool information to searchers to get like sandwich tips. So it's like the opposite trend of like, I feel like it's like the rise of MEV on Solana right now, and it's like the dying phase of MEV on Ethereum a little bit, or like stabilized phase. Yeah.
So it's like twofold. The reason behind this is that infra has been more developed on Ethereum just because it's been worked on for so long by so many teams. But also Solana, due to it being much more meme coin heavy in terms of trading, it's much more ripe for MEV bots, essentially, paying high fees because they can make quite some money by sandwiching and arbing certain pools. So yeah, I think it just also comes down to how the chains are being used, which is not necessarily on par.
Yeah.
And that's also kind of like my I mean, I like the metric, but it's, my reason why I think it's definitely not perfect at all is that it is comparing one thing, but there's so many other nuances to a chain. That's not the only thing, the only reason people use a chain. Like, I don't know about your experience, but the reasons I would use Ethereum or other EVM chains, it tends to be different to the reasons I would use Solana currently. Like I would do my meme coin trading on Solana, and if I want to do lending and stuff like this, I'd still, maybe out of old habits that die hard, still use Ethereum. But yeah, it's hard to bring a one metric that everyone can agree on. That's never going to happen. But yeah, I just think it's also on us to create better metrics, I think. So I do really appreciate that like Blockworks is putting work into putting out new metrics, as controversial as they are for some. But I think we should push for other new metrics as analysts, because the way to evaluate TradFi is just not necessarily applicable to blockchains, which are entirely different systems and just do require entirely different ways of valuating. Yeah, so I would encourage analysts to create new metrics and make arguments for them on why they're good at showcasing what they want to showcase.
Yeah. If you, Boxer, if you pull up the link I sent from Whale Hunter about the trading bots war, and pretty much it's like, if you look at the volume dominance, it's all Solana, like 80% ish. And like the Trojan bot, which is pretty much the biggest bot by lifetime volume now, it's like 22 billion. They've had lifetime fee of 180 million. It's all on Solana. And imagine all these fees that can be at the same time paid out by the trading activity. Yeah, like the chart below, the volume dominance by chain percentage. This purple is all Solana, 80% up and down. And if you think about like Telegram bots that are having highest lifetime value fee, which is solely on Solana, then it can kind of like translate how all these like activity and REV has been accumulating.
Yeah. These are users that are much more prone to MEV.
Right.
Cool dashboard.
It's Whale Hunter is coded.
That's insane levels of research went into this. But yeah, essentially, I think what we're saying is the Solana, or like to summarize, like, okay, what might be reasons why the REV of Solana is so much higher than Ethereum's revenue at the moment is that Solana's user base and Solana's sole use case at the moment is meme coin trading. And meme coin trading does produce a lot of kind of externalities, or is is a breeding ground for for producing kind of negative flow MEV opportunities, and that kind of gets amplified, or like that effect is a bit stronger than if the same were to happen on Ethereum, just because the tooling and infrastructure on Solana doesn't seem to be as far advanced. Where like if today there was a big meme coin hype on Ethereum, I think lots of transactions would just go via private mempools. Lots of transactions would go via whatever CowSwap solvers, the 1-inch solvers. I think even Matcha has like an auction order system now, right? Uniswap X, like all of these different mechanisms are in place now to basically uh, maximize the maximize the amount of value that the user gets while swapping, and minimizing the amount of MEV that is being created. So like there's such a sophisticated kind of out of protocol pipeline now, and like all of these different like swap mechanisms and whatever, and like that minimizes the amount of MEV tips that are being paid in Ethereum land. At least that would be my kind of high level understanding. Meanwhile, on Solana, it's I honestly don't like I don't really understand what's happening like on terms of like how the actual MEV pipeline on Solana looks like. I think it's literally just like G2 has a ton of validators, and therefore G2 is able to kind of like order the slots more efficiently or whatever, like more often.
It's similarly, they have this bundle service where they receive searchers bundles for, sending transaction together with users to background or sandwich, and or however you want to put a bunch of transactions together. And at the same time, when you send the bundle, you might give them a tip, and so that is like how the bundle Jito tip comes from. And of course, searcher you pay the tip from their profits. That's pretty much.
What would be cool is that we do not have, I think, and I think is a problem when looking at like comparing chains, is that, for example, for MEV, we have stats on both sides, but we rarely have stats with both in a comparable fashion. Like if you look at like teams that look at MEV, usually they're specialized in like EVM MEV and are very good at it and have very good metrics for it. Then you're gonna have stuff like Ghosts, who has done like sandwich.me, which is a good website to showcase MEV on the Solana side. But we don't really have any place to regroup all this and actually like how do they stack up against one another, or like where do people get kind of fees extracted more from them? Where does settlement price? Where is it more competitive? And all these, I think, would be really cool metrics to have on hand. If you look in general on like crypto Twitter, like one of my main problem is that so many discussions happen just because they lack data and people are just making assumptions on so many things. But we could actually help in that regard. Of course, the issue is that being an expert on SVM doesn't make you an expert on the EVM, and vice versa. So it's just like triple, if not like I don't know, 10x the work to do both at once. But yeah, it's something I would encourage. The other, I think, issue that it comes down to is that analyzing one protocol, analyzing one chain is something that is accessible to a lot of analysts that can do it from their bedroom, wherever. But you can't just ask someone to do for free like a lot of research and maintain like a dashboard on MEV across all chains, and that's just, the incentives aren't there at all, and it's just so much work people don't really realize. But I wish we had teams pushing for this to happen, and maybe some grants in order to unify metrics so that we have like a comparable ground, and from there we can actually discuss, are those good metrics? No, okay, well maybe we can actually evolve and create new ones, and what would be a fair ground of comparison to make sense of all the nuances.
At the same time, I wanted to pull up this thing, which just like a little bit of topic off topic. It's just like when I just saw REV that Dobby shared with me, I was like very confused, because like Flashbots also tried to popularize, or like we kind of raised this like REV term as well in like 2021, which I would believe it was before Blockworks pushed for their version of REV, but it's a totally different thing. It's kind of called realized extractable value. So what we were saying is basically saying, hey, we keep talking about MEV, and we're trying to quantify MEV based on like the extracted value from like the arbitrage or transactions profits from the searcher. But really, it doesn't mean like when you think about maximum extractable value, it's like a theoretical number that like what's the all the value you can extract. But in practice, on chain, everything it got extracted is only realized of that portion, right? So we were like trying to say, okay, all these things we talk about really is just realized extractable value. It's not really MEV, so we should call it REV. But I don't think nobody really actually like adopted it much, but it was just a concept. But we had this like transparency dashboards, like basically showing how much MEV or REV were extracted overall. Things emerge. Of course, a lot of the number are not working anymore. It was like sunset after a while. But like the methodology of this really is looking at how much are basically proposers balance before and after the block look like. So meaning like it's all the money that proposer gets, including gas priority fee and MEV tip. And why do we consider also gas priority fee as MEV or like REV? It's simply just that, like however you pay the money is just a notion of whatever the choice you make. When you look into all these MEV bots, a lot of them pay everything in gas priority fee and pay zero MEV tip. A lot of them pay zero gas priority fee, but they pay a big amount of tip. When you are a block builder, when you consider the transaction to be included in the block or not, what you really care is like the net, outcome of how much money you get, right? So it doesn't really matter if they're paying you in like gas priority fee or in a builder tip or any other like form that can be included in the thing. So yeah, like REV was basically an idea we kind of talked about for a while. It kind of is almost similar to what Blockworks REV is, because if you think about the difference of the formula, it really is just not including the base fee, which the Blockworks REV includes. So I think like another related concept was basically like, I think like a lot of my thinking is coming from like working on Flashbots as we're a block builder and we have like order flow auction product like OFA, like at MEV Share, where, for example, so if you think about building a product like a MEV Share, you want to get as much as order flow you can, or as a builder as well, you want to get as much as order flow in your block. Or, like you get order flow so you can get the searcher to search for the refunds to return to the user. And what we look at in the market really is like all the order flow value. And when you sum up order flow value, really it is all the kind of transactions, gas priority fee, and how much tip they may pay. And I'll show you like a private dashboard, which I'm not supposed to, but like this is pretty much what we're trying to measure all the time for the customer finding and customer success. So when we look at the market, it's really is like how much order flow, how much block market share there is for different block builder, but also how much value are carried in all these block, right? So like you basically look at all the gas priority fee and all the builder tip that was contained in that block, and you look at how much this builder has in the order flow market. And then you want to break it down and say, okay, if there is a lot of value coming from these Telegram bots, should we go after them trying to get their order flow for us exclusively? Or should we like basically get their flow so we can get searcher to like background and get refunds? Or if like some wallets has a big market share, we probably should trying to work with them in partnership. Or if there's a like a centralized exchange, they actually pay a lot of gas fee, we might need to go after them. Or if there's like a big MEV bots, we should talk to them. So it's like comes down to very similar, but like a different angle. And it's also similar to how, basically the Burak paper that we interviewed a while ago is modeling everything. So we kind of call it slightly differently, but we call it like true block value. So because when a block builder is bidding the block for the proposer, if you think about this whole like funnel, they get a true block value comes from all the order flow or transactions that are willing to pay for the block space. But it might be, through this like block builder competition, they might be able to keep 10 ETH out of it as their profit. And so there is a bidding value to the proposer, to the actual final like proposer revenue that is. But like, not considering this layer of competition, the true block value would be all order flow value where it's coming from. And like this paper basically measured that. Like you do need to look at how much value are coming from what kind of party or different entities. I would say, how to say, like if you look at REV today, Solana has like way bigger, looks like, than Ethereum. That is still a good measure, right? Like Solana is accruing more value overall on chain than Ethereum. But then the question of where does it come from will be a good indicator of like if that value can stay or not. So if say like a lot of these value are coming from Telegram bots, maybe after a whole frenzy, it may not stay. But if it comes from like L2 or like actually needing the space or like the data availability layer from L1, it may grow over time. Who knows? I don't know. I guess like that's not very true because like they want to lower the block fee. But I'm just saying, like understanding the source of the revenue also is very important.
I agree, but that depends on who you're talking, like what the perspective is. Obviously, for like block builders, hell yeah, like more fees, But like for users, is that really better? I don't necessarily know it. Like you want to, so it depends who you're optimizing for, like what metric, what perspective you have on these. I'm less familiar in general with, MEV on Solana, but I know that on Ethereum, for example, some tips are just paid through regular transfers. In a block to to the block builder and stuff like this. I'm sure you take into account all this for like flashbot stuff, but these are the nuances that REV probably doesn't necessarily account for. I don't actually know how much is paid in that like method. But yeah, it's just like slight nuances that I don't know. Where exactly does the line stop and where it's just because different designs will lead to different ways people use those chain, and paying through a transfer or priority fee or whatever, it doesn't really matter. The end of the day, it just needs to be accounted for if you're going to compare to every chain. But once again, I actually have no idea
Yeah.
how big of a
So
percentage that is of how many. Yeah, what is the percentage of fees that are paid through regular transfers, and is it negligible or is it actually
So
significant?
I think like the how to say, like the regular transfer you refer to is actually how like block builder is sending their bids to the proposer. So that part
Okay.
I don't think it's like affected or like even like considered in this whole formula. But there are definitely lot of things that's like off-chain deal that's happening in two
Yeah.
cases. One is the
Wait, can
order
we
flow.
quickly take a step back? We're basically now discussing, is the methodology of REV even all encompassing
Yeah.
for
Yeah,
for the payments that are being made that should count towards MEV? And I think what
yeah,
Dolly just said is, okay, there is normal transfers, are they being counted? And I think
Yeah.
that's
Exactly.
that's just the
Yeah.
normal way like MEV fees are being paid.
so
But
so
what other options might there be that might
yeah.
not be considered here?
So there are a few like how to say non-standard transfer or payments that are happening on chain. One is what we were just saying, where like say there is like a builder transfer to proposer at the end of the block. That is how kind of like a standard how like the MEV proposer revenue are being paid out today. And I don't think that will affect the final formula of all this. Like so that shouldn't matter or create any issues. But like besides that, there is like I would say like two type of cases where there are like non-standard transfer. One would be OFA. So OFA transaction would be more like there is a user transaction that is like maybe swapping on Uniswap, and then this transaction went to a private endpoint RPC like Flashbots Protect or MevShare, and then
Hmm.
we have a searcher who saw there's a background opportunity. They will add their searching transactions or like a background swap next to users, and then the third transaction would be a payout to the user. So in the searcher's second transaction, they will pay the builder a big tip, maybe like say like 10 ETH. But this 10 ETH is likely 9 ETH or 90% are refunded to user. So the third transaction actually is builder sending back to user. And I'm not sure if this part is included, as in like deducted from the builder revenue. And so that part should be deducted, but may not
Yeah.
be. So I think in this case, the REV metrics can be inflated a little bit. But overall, OFA adoption is quite low. I would say it's like less than 5% of the transactions are actually having a background and then a refund. And then the refund
Hmm.
value is probably not that big. So this case actually will inflate, but I don't think it will affect the final number by a scale. Another case would be the block builder having exclusive deal with like different applications. So for example, like Bananagon, they had a deal with Titan, and in this case, Bananagon may pay Titan like 100 ETH in this block, but supposedly Titan will have to refund them at some point. It's also another link where like builder actually is getting less because they are refunding, but it's probably not accounted because they might be paying out from like anonymous or non-associated address. So that part I think could be a little bit substantial, but also that part has been dying down. So I doubt them actually going to affect the final scale. But
even the worse outlook for Ethereum. But actually, like, there might be cases where it's just like, okay, if there's private contracts being made, like you're saying, like Banana Gun or Banana Bot or however that thing was called, and Titan make a deal, and then it's just some like standard ETH transfer from like one wallet to another, and it's like not like you wouldn't be able to recognize that as like this is an REV payment, right? This is just a payment from one service provider to another service provider. If that somehow ends up in the data set, like we should seriously question his methodology. So I would not assume that that's a part. Even like they could be filtering for like special wallets or whatever, but it wouldn't be part of like any normal MEV. Like it wouldn't look like a normal MEV fee payment. So like that's
no,
what I'm saying. So like in that case, it might actually be understated the volume, but like you're saying, basically both of these cases are not that often. It doesn't happen that much. So like generally, like maybe with a margin of error of plus minus 5%, up or down, the numbers for ETH should actually be correct. Which I think is
yeah,
important context. Like you should be able to question this metric and be like, okay, what the fuck are we actually measuring here? But as it seems from one of the MEV data experts, one of the reigning MEV data experts, it doesn't seem like there's that much to critique about this. Like this
another
should be capturing most of the MEV fees.
Yeah, but also again, like what does this metric really mean? Because if you think about this deal, right, like Telegram bots were willing to pay the 100 ETH, and it is up to the block builders' capability of competing in the auction. Say if they were able to keep extra part to be refunded. So like if you're talking about like value accruing of the chain, economic value, like the Telegram bots were willing to pay that amount. So like for the block space they wanted. So like it's kind of like the
But
amount.
let's not get stuck in those kinds of minute details. Like I get your point of like this could be REV, so like we might not even have to deflate it. But in the end, like these are the numbers that kind of come out, and like maybe there's some out of protocol, or like this is out of protocol, where it's like there's out of protocol block inclusion mechanisms, but the fees are not being paid in the standard out of protocol way. So yeah, I don't know. Like, I'm just looking on the Blockworks research. It doesn't look. I don't know if they have like docs on like how the methodology is exactly kind of structured here. Like, if the queries are open, I don't think so. Totally reasonable. At least Blockworks is an institution that like kind of vouches with its name for all of these things. But all of that said, it's like, okay, we can't really. The methodology seem pretty safe. Like we've said, like, okay, on Solana, the vote transactions, that's a bit ridiculous because like this should be like this is a validator to validator action. So this is more like on the consensus layer of the chain. You probably shouldn't count them, but this is just 5%. So it's like actually the metric kind of makes sense. Then for MEV, we have compared the values, and it's like, sure, but like in the end it both kind of facilitates like these like there's like fees being paid. So validators, or in Solana they actually are they also validators, I forgot, but like whatever the validators in Solana land are called, they're just accepting these tips, and then you are able to sandwich someone, or you are able to get your transaction in the block first. So like there's like comparative metrics there, and then it's like, okay, what we can kind of establish is like, okay, Solana is this one very specialized use case of this has just turned into the global casino. And if there's a new meme coin that launches, it's very likely to launch on Solana. That in itself is like a very high, like REV driven, like, or like, I don't know, this is an activity that drives high REV. Whereas if you kind of compare this to Ethereum, or let's just compare this with Ethereum mainnet for now, where it's like, okay, there's literally people that have like hundreds of billions of dollars in lending protocols over there, and they don't really care about REV or like any, like there's no REV fees to be earned like having big lending protocols on your chain, and like Ethereum's promise is really just to be like, okay, we're very decentralized. There's no way any like validator set can fork you out of the chain or fuck with your money. It's like very sovereign. Like there's all of these like properties that make ETH, right? So it's like, okay, is this really and then like I think finally we can kind of get down to, is this a fair metric to compare all of these things on? And it's like, sure, but also no. And I think we've already kind of like started this discussion here. And there is nuance to it. I think in the end, that's what I think all of this always comes back to. And like if we go down, like for Ethereum and Solana, at least there's like millions there, right? And then if we go down the list, there's like whatever, ZK, like bless their hearts, some, I'm not gonna name a specific name, some ZK chain, which is like, yeah, they've made like whatever $300 in REV in the last month, and it's like, yeah, guys, what are we doing? So like I think generally, directionally, it is a good metric to like compare all of these things, but the problem is always lays in the detail, where like we can have a discussion about the benefits and the pros and cons. What's the cons? What's the cons in as a full word? I don't know. The benefits and the downsides. That's the word. The downsides of this metric, and like we can actually contextualize this by kind of like looking at, okay, there's a lot of Telegram bot activity for Solana. So like probably a large part of this REV is just retail flow, and like a lot of like the kind of trading volume there is made up by these bots. And like if that ever kind of gets solved, and if the infrastructure involves, like maybe the REV goes down, we can also like, I think one thing we haven't touched on yet is like, is this good if this is that high? Is it good that like Solana is probably rinsing its users by, what is it, 40-50 million even in down month? Like I just want my trade to be executed, and I'm just getting fucked. It's like, is this even like is this a good state? So like maybe what do you guys think about like just like the high level concept of like, should this even be a thing?
Yeah, I think it's like right now part of the debate is like, should it be used to evaluate change against one another, and is it a metric we should optimize for and see rise in the future? I think it's definitely a metric we should all look at. I don't think it's the one all be all. And in terms of evaluating chains for it, there's like currently it doesn't really reflect the truth of valuation. Like if you look at, for example, let's take Bitcoin, but Bitcoin has this like weird status where it's just like the original meme coin, I guess, and that brings it like a ton of value. I mean, I don't know how you call it, but like I feel like the original meme coin is probably.
I think that's fair. Fair. We're all just living in Sailor's world.
And in over there, like they're not making REV that like if we evaluated change based on REV, like Bitcoin would be down so bad in terms of market cap. You also have Tron, where REV doesn't necessarily isn't on par with valuation relative to Ethereum or Solana. So far it hasn't been the metric that showcases, or like the metric isn't a good proxy currently for market cap. But maybe going forward, it does have some impact and some influence. I just think that there's more, for example, on the same dashboard, which I think is a overall interesting dashboard from Blockworks, but give me 1 second while I share my screen, and here we are. So they have network REV, and they also have application revenue. I think this is almost a metric that is, in terms of as a dev, like that's a metric you want to have as high as possible. You want to track devs, right? But from the user perspective, there's always nuances. Like, is it better to have some DEX on Solana and charge 10% of volume, and therefore have much higher revenue than on Ethereum's Uniswap, or is it just better to just have more volume overall and grow the pie over time, and hopefully be more, I guess, respectful for users. Like, how do you compare those nuances? But yeah, this is a metric that to me feels very attractive if I were to be a dev looking at like what chain should I go for, like where should I make a protocol where I can actually get sustainable revenue over time. Right now Solana is clearly like they've gained a fuck ton over time, and now they've, what is it, like 50% basically. Used to be all Ethereum, and gradually it's grown. There's also Hyperliquid, which is interesting, currently at 12%. But yeah, my point is that REV is one metric. There's many more. It all depends on what your perspective is, right? Like, what is your goal? What do you want to actually evaluate? Valuing a chain, obviously, there's no one's going to agree on how to value something. That's the whole point of like open markets, is like people can have different opinion and buy and sell whenever they want, I guess. But yeah, so perspective, I think, is more of the question than is this a good metric?
Yeah, I think I agree with Dobby. I thought the app revenue one is also a very good perspective to consider. I think like REV overall is a great idea. It's like measuring how much people are willing to pay to use the chain, regardless who they are. But also it matters who they are. If it would be it would be better if there's a breakdown of if it's institute, if it's the retail, if it's like bots and stuff. So I'm looking forward to that. But also like it can definitely be, how to say, polished a little bit. Like for example, remove the volt fee thing for Solana. It's just not a very straight comparison. And also like, what does that really mean for L2 when you are measuring like DA fee plus L2 fee? And like, I don't know, like they are not really, I mean, L2 didn't like exist to mint to compete with L1. So when you're comparing the REV between L1 and L2, what are you trying to, conclude here? So, and also another point is that it would be nice to also have a variation of it where you remove the base fee, because I feel like to me, base fee now is getting burned. So it's a lot more attached to like economic value of the asset, as in like, the other chart ultrasound and another website had, where to look at like if it's deflationary or inflationary would probably be a more clean metrics for measuring the assets value. And then so when you remove the base fee from REV, it also gets cleaner to measure how much is the chain making or the proposal are making, and like that can kind of
So like
reflect. Yeah.
like net inflation is essentially what you're getting at, right?
Net
Like
inflation
how
would
do
be. Oh yeah,
like
my
how
point
do
was
net
like,
inflation of the tokens compare across chain, which I
yeah,
think is interesting, but is a different metric. And
yeah,
Solana
yeah,
is currently essentially subsidizing a lot of stuff for people to secure the chain, and it's just different systems. And I agree, this doesn't take this into account. There's also the fact that, like you said, like the roadmaps and the goals of both chains are different, where Solana is like this monolithic kind of chain which is beefy to the max, where Ethereum has this roadmap that is more nuanced with between L1 execution and L2 execution. And of course, depending on your agenda, if you want to take the Solana side, you're not going to care about, you're not going to showcase L2s. If you are on the Ethereum side, you're probably going to, emphasize that L2s should be included. Like, I don't actually know what is the right middle ground here.
Like if you're making the argument of like, oh, this is not really comparable because like Solana is just this one monolithic thing, and Ethereum is trying to scale via L2s and blobs and whatever, then you also just need to face the hard reality of like how much revenue is this actually generating. And I brought this up earlier, where it's like in the current months it's something like 700k or something against the total revenue of whatever it was, 14, 13. So like that's an absolute joke, and Ether's basically like sold itself cheap. And like that's the whole point of like there's like people on Twitter are advocating, and like I'm not sure anymore, so I'm not gonna attribute it to anyone, but there's like text DL2s, or like I think Max Racing, for example, like he was like, oh, this is like not acceptable, right? Like you're just like spamming all validators with data, and like they're just storing this data for you for basically for free. And then it's like, okay, but like if we say like, hey, REV is not a proper metric because this fails to consider that Ethereum has all these L2s and scales via the L2s and whatever, then like make them pay money and like show me that they're willing to pay that money, and they're not. They, like as soon as if Ethereum would actually scale the fees up for posting blobs to whatever, to be like 14 15 million, at the current stage there's enough alternatives, so like EigenDA or Celestia DA or any of these other DA layers that would just do you really think Base would pay that like if Ethereum really cranks up the fees to post blobs, do you think like all of the L2s would keep posting blobs? I don't think so. So
Base does when it happens. It's actually other L2s that usually move off and pay on like cold data.
Sorry again.
So it's to your point.
Base usually,
yes.
Base actually, to answer your point, Base does pay when fees hike on blobs. They're actually the ones who are more consistently posting using blobs. It's usually other chains that do, whenever fees hike past targets, usually because of Base, it's usually the others that go and use cold data instead as an answer. But I think that's like kind of a separate debate on our L2s is the way L2 contributes to Ethereum solely by blob fee. I don't actually think I don't think that's the value actual like goal of L2s. I think using the asset in the longer term actually has hopefully
so
more value.
You still believe in the ETH's money meme?
So
no, I'm not. I don't know. No, I just want it to be used. I don't like it. That's it's
no,
again.
No, but like that's the point.
Another topic.
You're saying like ETH has a monetary premium because it's going to be used on other chains, and they're like, it's kind of like this needs like people are going to use this to like sell their NFTs or whatever, or to like trade in DeFi and like store their value, which is basically like that boils down to the argument ETH is money.
It's sounding to me like the East Maxi would advocate an REV, but combining L1 and L2 as Ethereum.
I'm not saying REV is bad. That's not what I said at all at any point. I'm actually saying like there's nuances to it, and when you talk about it, you should be aware of them. I actually don't think it's a bad metric. I actually really like the metric in general. I never said
no, but nobody is whatever. But like I think to get back to this L1 with L2, because I think that's where a lot of the like tension here is, where it's like how does ETH accrue value, and like how does ETH accrue value in the future? I think like recent kind of blog posts and direction of the Ethereum Foundation, and however like etherealize like how that complex around like Ethereum core devs and whatever, they have realized, okay, we actually might need to scale the L1, or like I think that's like pretty clear by now, that they are gonna not abandon the L1 completely, like it was initially kind of planned, but rather they're gonna scale out blobs and L1 in parallel. Do you not agree?
No, I like L1 was always gonna be scaled. It's just the timeline was like it. Like if you look at the roadmap, like published, like I think 2020 from like Vitalik, like all the points that are going to be scaled right now are on that roadmap. It's just they were like just because L2s were so new and like so much focus was on actually making them a thing, L1 scaling was like kind of put to the side for a second, and now they're accelerating essentially the rate at which upgrades happen once more, and reprioritizing now that like
but that's really important. And I think like as always, like on crypto, it's like the narrative that matters the most, and the narrative for the longest time has been like we don't care about the L1 at all. Like we're only gonna ship updates that are relevant for like I don't know, increasing blobs and like increasing like roll up stuff and like all of this stuff. And it's basically like that's what they did with the last 2 years until Pectra basically, which is now we got like whatever we talked about in the last podcast. We don't need to expand on that here. But yeah, so like with that new like contextualization, I think you also like I think REV has actually become a more legit metric now, because I think REV actually has become a more legit metric now that Ethereum kind of like is re-entering the stage of like, oh, there should actually be things that happen on the L1. I think like the most interesting arguments, or like the conversation that I would like to have here is this good flow? Is this toxic flow? Should MEV even be a thing? Do we believe that this amount of MEV is sustainable for any chain? Because sure, Solana has a ton of retail flow right now. It's just a meme coin casino. But over time, probably the same thing that on ETH, the ETH infrastructure, the ETH kind of trading avenues and all of that stuff, just the MEV pipeline is gonna get more efficient. There's gonna be more competition in terms of the searches, the whatever, and I think over time that's gonna trend down. And if you look at the fee composition at the moment, it's 60% is all of these G2 tips, and it's I just don't think that's sustainable. If you want to build the Nasdaq on chain, that's you can't have 10% slippage or be sandwiched all the time.
Well, MEV is this double-edged sword where having MEV is just decentralized systems they will have MEV. That's just in essence part of decentralizing a system. You can't ever fully remove MEV so far, as much as we know, without some centralization aspect. Maybe in the future we can better mitigate it, of course, but there will always be in some aspects some atomic arbitrage and sexdex arbs. Sandwich is probably the one we should focus on lowering more, I guess. But whatever. But it's also, it's a good thing to have it because it just showcases it's a decentralized system. But you do want to keep it to a minimum because, well, depending on the perspective, but sandwiching, you want it to be, you don't want your users to get completely fucked on execution when they're not really aware and not really. They shouldn't have to worry about how the system worked. They just have submit a transaction, get the best settlement rate, and that's it. That's the prime user. Sorry, go ahead, Danny.
I don't agree with what Boxer said that Ethereum has to increase activity now. No one said that. No one said, oh, REV is a good metric now that we need to work towards it. Ethereum had a roadmap. L2 is the way to scale, and why don't you measure how much throughput are secured by the layer one? In that case, you should combine everything on L2 to say, hey, all the base volume counts as Ethereum. I think it doesn't mean that this metrics is interesting, but it doesn't mean that Ethereum needs to cater towards it for its roadmap. I agree that this metric shows that Ethereum is not accruing the economic value it should. It's just because the L2 economics is wrong. I think blob fee needs to be higher. But also it's so hard because there's Celestia and others trying to lower the gas the blob fee, a DA fee, and so how can you really keep people on your platform? The L2 roadmap seems to be not working or has its trouble. But it doesn't mean that Ethereum needs to compete as a retail chain. We have to have more meme coin activity and stuff. But yeah, that's my rant.
Yeah, no, I wouldn't I would not recommend anyone in Ethereum land to go and try to compete with Solana meme coin slinging or whatever. But I think we just need to ask that, we need to ask ourselves the hard question of why is the ETH market cap at 240 million or whatever billion, something like that. I don't know. I don't look at prices. I'm just a I'm just a data nerd.
Ethereum had a shift in, at some point it was are we doing sharding? Are we doing L2? And then started executing, and it's just growing pain of early stage of new a whole new part of the roadmap. Of course, it's not instantly gonna go balls to the wall and be crazy stuff. That's just part of the system, and the way it's being worked on is that there's no shortcuts. It's a long-term goal, and it doesn't actually really matter what happens tomorrow. It's not about sacrificing Ethereum's value just for a quick buck, right? So I still think the roadmap does make a lot of sense. I think in the future, whether it's L2s or app chain, make a lot of sense. If you want, controlling the stack in general is it has a huge upside. And I do also believe that if eventually Ethereum will land in a lot of the similar problems that Ethereum has, just because we're at a point where Ethereum is big, it's securing a lot of money, and it's very much more decentralized in the way that it's being worked on compared to Solana, and therefore there's a lot of discourse, a lot of disagreements. But it's a healthy debate. It does slow down development, but it's a healthy debate that eventually, you want to have. Otherwise, you're just much more comparable to a company if you like, one monolithic idea and thing forever. It's just, eventually you reach that point. It's just Solana hopefully will be the same in a few years, right?
Yeah, it's like if you're looking at Ethereum's positioning today, it's still the most mature and decentralized infra. And like if you think about like if I'm a big company and I'm bringing serious assets as an institute to come to a chain, I might choose Ethereum still over Solana. And in that case, we should probably make up metrics that's like looking at how much RWA are locked in the chain, and like there's so much stablecoin on Ethereum still, and it's probably leading. And so it's really is like a roadmap oriented, metrics like making things. So it depends on what you want to be as a chain. So
Yeah, a good future episode could be what are the metrics that we actually consider to be valid, and we can just run through all of these. That might be interesting. I think what this kind of comes down to, or like what I'm kind of reading between the lines is, it's very unclear why Ethereum is worth what it's worth. It's very unclear why Bitcoin is worth what it's worth. It's very unclear why Solana is worth what it's worth. We're kind of like, it's very unclear why Palantir is worth what it's worth. So like, I think just generally like humans have a hard time valuing assets at the moment. And like, it's unclear why OpenAI is worth as much. Like there's so many things which just like nobody fucking knows. And it's all just speculation. And this is like, it kind of, it kind of is like you're looking backwards and now making up a narrative of like Solana's recent growth, or like like market cap growth or whatever, is due to like the REV increasing or whatever, and we are kind of retrofitting that, or like we're spinning up this narrative of like, oh, this is important, but actually it's just humans are revaluing a thing based on, I don't know how much they like it, or based on vibes. Like there's literally like there's no, like if you go through the top 10, there's no reason, like there's Ripple in there, there's still Dogecoin in there, like all of this doesn't make sense. I think it's nice that the industry is starting to get into these early innings of like what's actually like, how can we cash flow companies. It might make more sense on the application layer, like we mentioned earlier, where it's like, yeah, pump fund and pump.swap, whatever, like the pump.fund people and whatever products they're building, they're printing money. And like that's just the product. Like they don't have any network, they don't have any validators, they don't, like it's just they build a website and they've actually earned whatever 300 500 million with that website. And I think like we're all trying to like, or like there's people coming in from the TradFi market that are trying to fit their models, which is like, oh, like future discounted cash flows and like how much revenue is this company and how much profit is it come. And now they're trying to apply this to these networks. Does that really make sense? It seems like there's at least something here. I think we can all agree on like, hey, this is an interesting data point to consider amongst all the other data point. Is this the one data point that we wish the Ethereum Foundation and the Solana Foundation and the whatever Arbitrum Foundation and the Tron Foundation optimizes for? Probably not, because it actually, in some cases, you like due to MEV and like externalities and like all of this bullshit, it might actually lead to like a worse experience of your users. Because like if the Solana Foundation, like it's kind of like this paperclip optimizer problem, right? Like if the Solana Foundation just says let's optimize for REV now, then it's like, okay, like let's make the chain somehow more susceptible to like MEV bribes, and like let's make the execution layer performance actually worse. So like there can be like very weird second order effects. So like that's why it's probably not the best metric here. Is it generally interesting to just like look at these numbers? I think yes, and I think we can all agree on that.
My read on the situation is that this metric was born out of need to evaluate, of course, what value is assessed to blockchain. And in TradFi, the way companies are evaluated is often based on revenue and well accepted kind of methodology to evaluate like a company and stuff like this. This is an attempt at essentially porting over that method. That's how I see it. But is that really the only reason blockchains are worth what they are? I do not believe at all. I think there's so many fucking other things, like I don't know, so many other things. How decentralized it is, which is really hard to quantify. How is it like, can you trust it to be live forever? Like all these are very interesting. What is the throughput? What is the block time? So many nuances. And I don't actually think there's one metric to rule them all that will be able to ever encompass all of it. So it's like I said before, again, it's like it's all about perspective. So depending on your perspective, this is probably a really good metric. If you're looking at, looking in the lens of like an investor and looking at the asset itself, sure. I also think that like decoupling the asset and the blockchain are, it's not necessarily like accruing value to Ethereum or to Solana doesn't necessarily mean that the actual chain is growing or vice versa. They're not necessarily one and the same. And I think we've reached a maturity point where we're actually having this much more agreed upon. This actual nuance between the asset and the blockchain is something people are accepting a lot more. Ethereum has been growing despite the market cap. Like there's still quite a lot of activity in terms of how much value it's securing has been growing. L2, if you factor in, is also growing, it has been the goal for a while to actually offset some of its usage to the L2s. So it is growing in many sense, but you got to decouple the asset from the actual blockchain and how much it's used. Those are not necessarily one and the same.
I would fundamentally disagree. If there's like, what's my reason to hold any ETH then? Like, ETH the asset should profit if ETH the network actually succeeds. That's the whole point. Like, and like in Ethereum's case, it's actually because Ethereum is a proof of stake network. Actually, the economic security of the network depends on the asset being worth something. So like it is not something that Ethereum like can just throw aside. It's actually a core part of its consensus mechanism is that the asset is worth something. So no nation state can just come in and buy half the supply for $60 million and then kind of be fine and capture the validator set.
Yeah, it should be above what the value that is securing, but I'm not saying that's not what I'm saying. But you could be a user and essentially hold just a bunch of ERC20s, NFTs, whatever, and just keep pocket change at ETH just for transaction amounts. But I don't think you can use the blockchain without using ETH, right? Or aside for like, pocket change, like I said, for like fees, right? You don't necessarily have to be directionally both using the chain and holding the assets constantly. I think.
Yeah. I mean, I fully agree. I understood your point in the manner that like ETH the asset and ETH the network are independent of each other, and the success doesn't depend on each other. But it actually does. Like
there is a lot of correlation. I'm not saying it's completely decoupled, but I'm just saying it's not as coupled as once believed.
I think we're
okay. Maybe there's a disagreement. Let's agree to disagree.
Agree to disagree. I think they need to be 100%.
I feel like the connection or the coupling is more to the market to decide, right? It's like if you think about a company, a lot of people will use Visa or like whatever some IPO companies' products, but then it's to the stock market to decide if they want to like buy in that stock and like keep pumping it up, kind of.
Yeah, but I'm just saying like Ethereum leadership, Ethereum Foundation should not separate these things. They should be thinking about how more people using the ETH network drives price to ETH the asset, because otherwise this shit is gonna die out.
I agree.
Yeah. All right. Good discussion. I think with that, is there any last words you want to say, Denning? Okay. With that, we've gone on for 1 hour 20 minutes. I think that's enough discussion about REV. I hope the listeners were able to learn something by us kind of like walking through all the different eventualities and the methodologies and the exact kind of parts of this. I think this was a very entertaining discussion. You have listened to the Index podcast. Share this with your friends. Share this with your company. Send this to any REV haters or REV lovers. We don't know. And we will see you next time. Bye-bye.
Crypto day wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bachelor, cherry picking liar. We call them out and set chart crown on fire.